Traders, buckle up. Because today we're diving into one of the hottest candlestick patterns that can supercharge your trading game, the pin bar. This pattern is your secret weapon for spotting reversals and jumping into trades before the price rockets in a new direction. No complicated formulas here, just clear logic, real-world examples, and practical entry rules that any trader, newbie or pro, can use. What's a pin bar? A pin bar is a candlestick with a small body and a long tail, or another name shadow, on one side. That long tail screams that the market rejected the trend's move, hinting at a potential reversal. For example, in a downtrend, a pin bar with a long lower tail shows sellers tried to push the price lower, but buyers fought back, driving it up. That's a bullish pin bar, so time to think about buying. There are two types of pin bars. Bullish pin bar, long tail at the bottom. Price got rejected upward. Time to hunt for buys. Bearish pin bar, long tail at the top. Sellers slammed the price down. Get ready to sell. Big tip, forget the candle's color. A red pin bar can be bullish, and a green one can be bearish. Focus on the tail, not the color. For a pin bar to be legit, it should have a small body relative to the candle, one noticeably long tail. Ideally, it forms against the current trend. Why does the pin bar work? Pin bars are like a front row seat to the epic battle between buyers and sellers. That long tail shows one side losing steam while the other takes control, signaling a momentum shift, especially when it happens at key support or resistance levels. But hold up, because not every pin bar is a green light to trade. If it pops up in the middle of nowhere, with no level to back it up, or during a sleepy market, it's probably a fake out. These trap pin bars often show up in choppy, sideways markets or against a strong trend where momentum just keeps rolling. To avoid getting burned, filter pin bars by key levels, volume, and market context. That's how you make them work for you. Example 1: a fake pin bar. Picture a price dropping in a downtrend, and a bullish pin bar appears. Looks tempting, right? But if it's just floating in space with no support and no pullback, so the market's gonna keep dropping. That's a low-quality setup. Steer clear. How to trade pin bars like a pro. A pin bar alone isn't a golden ticket. To stack the odds in your favor, hunt for pin bars at key levels. Here's a simple strategy. Identify a support or resistance level where the price has reversed before. Wait for a pin bar, bullish if tail is down at support, bearish if tail is up at resistance. Enter after the pin bar closes, buy for bullish, sell for bearish. Set your stop loss just beyond the pin bar's tail. Aim for a take profit 2 or 3 times higher your stop loss or at the next key level. Real talk example. On a 4-hour ETH/USD chart, the price drops to a support level where it's bounced before. Boom, a bullish pin bar forms, tiny body, monster lower tail. That's your buy signal. Enter after the candle closes, place a stop loss below the tail, and set a take profit 3 times lower the stop distance. The price reverses upward, hits your target, and bam! Profit locked in. Without that support level, the signal's weak, and you'd be smart to sit it out. Level up your pin bar trades. Boost your pin bar setups by combining them with other tools. RSI or stochastic. If the market's oversold or overbought and matches your pin bar, the signal gets stronger. Volume. A pin bar with above average volume suggests big players are stepping in. EMA, trend lines, or patterns. Use these to filter out false signals and confirm the setup. Common mistakes to avoid. Obsessing over candle color? Stop it. Focus on the tail's position. Ignoring key levels? Pin bars without support or resistance are like a car with no gas. Trading in a choppy market? Signals are weaker in sideways ranges. Skipping risk management. Even the best setups can fail. Setting stops and targets. Stop loss. Place it just beyond the pin bar's tail. Take profit. Aim for 2-3 times higher your stop or the next key level. Next level move. Use a trailing stop based on candles or an indicator like Ichimoku Cloud for dynamic exits. If this video lit a fire under your trading hustle, smash that like button, hit subscribe, and ring the bell for more market gold. Drop a comment with your favorite pin bar setup, and I'll catch you in the next video. Let's keep stacking those wins.